Dogecoin has once again come into the spotlight, this time riding on headlines about a new Musk-linked investment vehicle, but whether that spells opportunity or risk is hotly debated. In early September 2025, Dogecoin Doge traded around $0.218 with a market capitalization near $33 billion. Trading volumes have surged. One crypto news report noted DOGE's daily volume briefly jumped above $2.0 billion on a recent rally. Part of this renewed excitement stems from a plan to launch a public company with Elon Musk's inner circle at the helm specifically. Elon Musk's attorney, Alex Spiro, is announced as chairman of a new $200 million Dogecoin treasury company backed by the Dogecoin Foundation's House of Doge. That proposal, reported by Fortune via Cointelegraph, would let investors gain stock market exposure to Dogecoin without holding it directly. In other words, the press is treating this as a Musk-touched rebranding of corporate treasuries. Much like firms that bought Bitcoin or Ethereum years ago, now applied to the memecoin. For example, Vancouver's Neptune Digital Assets recently disclosed buying 1 million DOG via derivatives at about 37 cents apiece. And NASDAQ-listed BitOrigin raised $500 million in financing specifically to accumulate Dogecoin on its balance sheet. Even Tesla is in the mix. Musk's electric car firm has quietly revealed some Dogecoin holdings, though size is undisclosed, and has accepted Doge for merchandise since 2022. Taken together, these corporate moves indicate that Dogecoin is gaining institutional attention. Traditional investors who might have shunned a literal meme currency now have structured ways treasury funds, potential ETFs, to get indirect Doge exposure. This institutional narrative is one side of the coin. On the opportunity side, tying Doge to Elon Musk or his associates leverages his massive influence and loyal fan base. Musk's past interventions in Doge have been powerful. Back in 2019, a single Musk tweet, "Dogecoin might be my favorite," cryptocurrency sent prices soaring. And when he jokingly called Doge a hustle on Saturday Night Live in 2021, the price plunged from its all-time high. In 2025, even a casual social media mention of Dogecoin by Musk, or changes like the Shiba Inu logo on X, Twitter still whips up volatility. By aligning a Dogecoin fund with Musk's circle his lawyer, and hopeful integrations like X money payments, promoters are banking on Musk's brand to bring mainstream legitimacy. Crypto analysts note that if Musk were to plug Doge into X's payment features or let Tesla accept it widely, that would be a structural boost for utility, a massive step beyond mere memes. In fact, BitOrigin's CEO publicly linked their DOGE Treasury plan to Elon Musk's vision for X as a global super app, suggesting hope that Dogecoin could become a unit of account in Musk's ecosystem. Beyond Musk-touted buzz, objective data also point to growing Dogecoin adoption. In late August 2025, whales were very active. One massive transaction saw 900 million Doge, over $200 million worth, at the time, moved into Binance, briefly stoking sell-off fears. Yet on-chain trackers showed a net accumulation by large holders, roughly 680 million. Doge was acquired by big wallets that month, offsetting retail outflows. This tug-of-war, substantial selling pressure met by equally hefty buying, underscores that deep-pocket investors are actively trading Doge, even as they absorb new supply. In fact, data from leading crypto desks shows spikes in Doge order flows. One 24-hour period in late August saw more than $2 billion in volume traded, while an hourly spike hit $1.26 billion at 20 o'clock GMT on August 27th. It's about 4 times the norm. These figures suggest institutional desks and treasury vehicles are shaping liquidity. Market data analysts even note that Doge's price has been very range-bound lately, around 22 cents, with tight support $0.219 and resistance $0.225 as big players accumulate during dips. From an opportunity perspective, that paints a picture of buy the rumor. Trade the range heavy liquidity provision that could cushion extreme swings and set up a controlled breakout if sentiment turns bullish. Regulatory developments add to the opportunity thesis. In May 2025, NASDAQ filed for the listing of a 21 shares Dogecoin ETF, structured as a trust-tracking Doge price. It's around the same time, major U.S. exchanges jointly proposed new generic listing standards for crypto ETFs, explicitly including crypto-based exchange-traded products like Doge alongside other altcoins, Solana, XRP, even novelty tokens. If the SEC greenlights such rules, it could dramatically lower barriers to launching and approving Doge ETFs, just as it has for Bitcoin. Already, several issuers, Bitwise, Grayscale, to One Shares, etc., have active Doge ETF filings. These filings have been delayed, the SEC has taken full review time, but analysts say that approval of a spot Doge ETF could drive large inflows. Some predict 50 to 150% price gains in the first year, potentially pushing Doge toward 30 cents plus. Later in 2025, moreover, seasoned corporate investors believe that a public dog fund traded on stock exchanges would open new capital sources. Institutions that can't hold crypto directly for custody or regulatory reasons could use these stock-traded vehicles to gain Doge exposure. And some, on the opportunity side, there are many crosswinds. Musk's cachet, heavy whale buying, booming volumes, and looming ETF regulatory tailwinds. The influx of $132 billion so far, that companies announced to buy cryptocurrencies in 2025, mostly BTC ETH, but now branching into meme coins, suggests a broader institutional diversification trend. Of course, the flip side is caution. Dogecoin's fundamentals remain weak by any traditional measure. It was created as a joke, has no fixed supply cap. An inflationary issuance about 5 billion new Doge, are mined annually, is baked in. Even the SEC filings for proposed Doge ETFs explicitly warn that infinite supply is a risk factor. This means Doge can be diluted simply by new coins entering circulation, unlike Bitcoin's capped scarcity. The asset is still driven by social media and meme dynamics. One Musk tweet or public mention can pump the price, just as it can send it crashing. Musk himself is a double-edged sword. His history with Doge shows how quickly mood can flip. Recall May 2021 Musk saying, "Dogecoin is a hustle on live TV, sent Doge tumbling from all-time highs. That unpredictability is a risk." Moreover, large whale movements like the 900 million Doge transfer can create short-term circuit breakers of volatility. The recent data suggests that after that transfer, futures open interest fell by approximately 8%, indicating that traders were deleveraging to avoid sudden swings. Lower open interest means less firepower for big moves, perhaps tempering volatility, but it also underscores that market participants are skittish. Then there's the broader crypto market context. Dogecoin's fate is not independent, tends to correlate with Bitcoin and overall risk appetite. If Bitcoin staggers or crypto winter hits, DOG, essentially a more speculative altcoin, would likely slide hard.
Right.
Institutional buyers so far seem comfortable with modest positions. Many corporate treasuries have only small percentages in crypto, so any sharp downturn in crypto could trigger quick exits. On regulatory grounds, Dogecoin is still unregulated with regard to commodities rules. While some analysts optimistically talk about SEC reclassifying Doge as a commodity to allow ETFs, that has not officially happened. Doge remains in legal limbo. The very fact that 21 shares ETF is a trust holding actual Doge, not derivatives, highlights SEC caution. If regulators ultimately nix memecoin ETFs or impose limits, perhaps due to meme volatility concerns, that could spook the market. Another structural risk, even with institutional backing, Dogecoin lacks the ecosystem of many other cryptos. There's hardly any developer community or DeFi on Doge's network. Without real utility beyond payments and speculation, it may not justify a high valuation. The public is enamored with the Musk Club backing, but if that enthusiasm fades, or turns out to be just PR, the price may deflate. In short, for every rising whale or treasury buy, there's a potential dump around the corner. Retail investors who catapulted DOG's 2021 rally may see this news and pile in at current highs, only to see a crash if the hype proves. Fleeting balancing the sides, what should a prudent observer conclude? Dogecoin's opportunity lies in its new strategic positioning. It is no longer just a Reddit punchline, but is being packaged as an institutional asset. The involvement of respected crypto firms and high-profile figures lends credence to the narrative of adoption. High liquidity and active accumulation by large holders suggests there is real demand at these levels. Potentially, regulatory progress on ETFs could further legitimize Doge, making it much easier for pension funds and big players to buy in down the line. In that scenario, current owners might see substantial gains. Some forecasts even imagine Doge reaching and surpassing 30 cents. If the ETF wave fully materializes and X-Money integration boosts use case, however, the risks are equally tangible. Dogecoin remains wildly speculative. Its sudden price swings, fueled by whales moving hundreds of millions of dollars of coins, highlight that the market can turn on a dime. The planned Musk-linked fund, while headline grabbing, still at the pitch stage, meaning no guarantees it will launch or attract enough capital. Any blow-up or failure there, or if Musk publicly distances himself, could trigger a knee-jerk sell-off. Additionally, the fact that futures traders have backed off OH down 8% suggests market makers are cautious, dampening immediate momentum. And let's not forget the old adage, memes lose their meme value once everyone is on board. If too many institutions jump in, Dogecoin might lose its viral charm and face selling pressure from speculators who bought the story rather than use dash case. In practical terms for investors, measured approach is advised. Watching the developments is key. If a Doge Treasury fund actually gets funded and listed, and if a regulated Doge ETF wins approval, those would be strong bullish signals to ride the momentum. Conversely, if the SEC demurs, or if we see heavy sell orders from whales beyond what we've already seen, that warns caution. Also, keep an eye on broader market cues. If Bitcoin or equities are tanking, even the best Musk-linked meme coin would likely suffer. In conclusion, Dogecoin's recent uptick tied to Elon Musk's circle is both an opportunity and a risk in equal measure. It's an opportunity in that it reflects a new wave of institutionalization, giving Deutsche a bridge into the mainstream finance realm. But it's a risk because underneath the new packaging lies the same unpredictable, inflationary meme coin we've seen before. Any long-term valuation beyond mere speculation will require Dogecoin to earn its keep through real-world use or sustained demand, not just ride Musk's coattails. Investors should stay informed via on-chain flows and news. Large wallet movements, trading volumes, and official filings are clues. If the institutional interest keeps growing and regulatory frameworks fall into place, we might see new price highs. But if that enthusiasm cools or external shocks strike, Dogecoin could just as easily snap back to lower levels. In the volatile world of cryptocurrency, opportunities and risks go hand in hand, especially when memes and mega capital collide.